Investors like the look of those National Bank results, but provisions for credit losses were up. They topped $500 million, up from less than 140 million. Let's get more from Ernest Wong, Head of Research at Baskin Wealth Management. Great to see you.
Yep.
So this is the only Canadian bank stock you guys own?
National is our largest bank owner.
Largest, sorry.
Largest.
Okay.
We also have a small position in Royal Bank, but our general exposure to the Canadian bank sector is quite low.
What attracts you about National, relatively speaking?
So National is quite unique relative to other Canadian banks in the sense that, first of all, half of their loan book is in Quebec. They don't really participate in the normal personal and commercial banking in places like Toronto and Vancouver. Mm-hmm. They focus more heavily on wealth management and investment banking and financial markets. These are areas that they feel like they can add value and earn superior returns and not have to compete head-to-head against the big banks. And we feel that they additionally, internationally, they've avoided going into the United States and avoiding competing against major players there as well, and finding niches where they can earn profitable returns on equity. And they've done a terrific job over time.
That's interesting. The old blue ocean strategy,
right,
where you don't face that much competition as opposed to a Red Sea bloodbath.
And that's exactly what you want to see in a bank, which is they understand the strengths that they have and the capabilities in the markets that they're able to compete effectively in.
How about the acquisition of Canadian Western Bank? Does that seem to be going okay so far?
Yes, and that was a deal that we thought we viewed very positively for National Bank in the sense that it allowed them to expand in Canada without having to spend the money to build out an extensive branch network, again, in places like Toronto and Vancouver or Calgary. Canadian Western Bank focuses more heavily on the commercial space. And there's a lot of opportunities for National to really come in and improve the cost structure, adding on things like wealth management services and improve the return profile there. And I think we'll get more details at the earnings call at 11 today, but it seems as though they've been having pretty good early results in achieving cost synergies and funding as well.
No, but still a heavy exposure to Quebec. Does
Yes.
that increase risk in the sense that you're more concentrated?
No, and I think that's been one of the aspects that has helped National Bank over the last few years, because the Quebec economy relative to the rest of Canada has been relatively insulated from the pressures that the other provinces have faced. Housing prices are a little bit more affordable relative to incomes. Consumer debt levels, because of lower housing prices, are lower. They have a relatively diverse and stronger economy, and that's helped National stock price.
I'm just looking at a 5-year chart here. I'm not sure we can put up a comparative chart between National and the Banks Index in Toronto. There's a 5-year chart. So total return on the stock, according to Bloomberg, about 160%, including dividends, whereas the Banks Index, a total return of about 124%. So it sure has beaten the pack.
Yeah, the stock has underperformed a little bit year to date. I think it was more due to the fact that the valuation was a little bit higher going into the year. But I think what you're seeing is that banks that have a focus on higher returning sectors, such as financial markets and wealth management, such as Royal Bank and National Bank, are outperforming those that are more focused at the retail level, which is facing a weaker consumer, slowing housing prices, and those kinds of issues.
I guess something like wealth management is beautiful because you don't have to put that much capital into it.
Yes, and it's been a real big focus for a company like National to grow this fee-based business that doesn't require capital requirements, and they've done a terrific job in growing that footprint, and is actually a key aspect of their growth opportunity with Canadian Western Bank, because Canadian Western Bank has the commercial relationships, but they have never really been able to build up the wealth management capabilities, which National will be able to layer on.
And as you note, or your argument would be they're relatively light in their exposure to tariff sectors at risk from tariffs, such as automobiles or aluminum or steel.
Right. I think going into the quarter, that was really the big question, which was the extent to which National was going to be impacted by the macroeconomic uncertainty from tariffs. It doesn't seem, looking at the results this morning, it doesn't seem as though they expect a major impact on their business. They did lower their macroeconomic forecast for the purposes of estimating loan losses slightly, but did not materially increase their loss reserves beyond the addition of Canadian Western Bank.
How is their balance sheet? Their regulatory capital apparently slipped very slightly in the latest period, but they have plenty of flexibility on the balance sheet front.
Yeah, and I think you see that with the dividend increase. They raised their dividend by 3.5%. Analysts have been wondering, after the acquisition of Canadian Western, are they going to start buying back stock? And I guess with the dividend increase, they're probably not going. That's probably more of a 2026 event. But they're very well positioned. Canadian National Bank has historically been a very prudent manager of their balance sheet, and we see no reason why that's going to change going forward.
It's interesting, they've done such a good job, whereas Laurentian Bank has just struggled. I'm not sure. Oh, yeah, do we look at that scorecard? Certainly National Bank outperforming over 5 years. But Laurentian Bank, without getting into details, it's such a stark contrast. They've struggled over the years.
Yeah, I think what you've seen certainly in the last part of the decade, is that the larger banks that have the scale are outperforming the smaller banks that are not as sophisticated in the risk management, which is one of the reasons why Canadian Western Bank put itself up for sale, because they had struggled to migrate their capital base to a more advanced methodology, which is something that National Bank is going to be working on and saving quite a bit of money on that front.
Ernest, thank you very much indeed.
Thank you.
Ernest Wong has been our guest. We always learn something from him. He's head of research at Baskin Wealth Management.